That Tesla earnings call, man, has made me so bullish on FUV. I've highlighted a bunch of stuff that relates to full self-driving and robo-taxis, and then the stuff that's in red is the stuff that I think applies to Arcimoto.
This is Tesla's earnings call.
This is Tesla's earnings call. And in hearing what he was saying specifically about full self-driving and robo-taxis, it made me think that a lot of what the market is pricing and a lot of what the market thinks Arcimoto needs to do in order to get where they got to go is completely wrong. And when I went back and I started looking at some of the old interviews that we've had of him, Mark is telling you exactly what his plan is. And when I heard this stuff from Elon Musk, I'm like, you connect the two and this company is going to explode. The fundamental focus of Tesla this year is scaling output. Over time, we think full self-driving will become the most important source of profitability for Tesla. Let me say that again. The most important source of profitability for Tesla. If you run the numbers on robo-taxis, it's kind of nutty. It's nutty good from a financial standpoint. And my personal guess is that we'll achieve full self-driving this year with data safety levels significantly greater than present. Cars in fleet essentially becoming self-driving by a software update, I think, might end up being the biggest increase in asset value of any asset class in history. A lot of this stuff mirrors what Mark is saying. Elon Musk is going to usher in this era of robo-taxis. The idea that some part of autonomy built into a car or any vehicle is going to be a must-have in the future. Robo-Valet is the entry level, and then we move on from there. Okay.
It's like level 1 of full self-driving.
Or even 0.5, really, because you're still driving the car. This is what he's saying about this year. We will do a lot of engineering and tooling and whatnot to create Cybertruck, Semi, Roadster, and Optimus. The reason why I highlighted this is because Optimus is the first product from Tesla that requires autonomy in order to function. So it's the first time that on the product roadmap, FSD, AI, however you want to call it, is essential for that product to have any value.
It's FSW, by the way, full self-walking.
Full self, right. In terms of priority of products, I actually think the most important product development we're doing this year is actually the Optimus humanoid robot. This, I think, has the potential to be more significant than the vehicle business over time. Tesla could easily reach a $3 to $5 trillion market, maybe $3 trillion, maybe not $5 trillion, just on vehicles, just in vehicles. So if he's saying that Optimus can be an even greater revenue stream for the company than vehicles, and we understand that it absolutely needs the full self-driving software, or FSW, in order to work. This is telling you that in order for him to achieve the goal of Optimus being worth anything, full self-driving in the cars must already exist. Another really bullish thing for Arcimoto, we're not currently working on a $25,000 car. The thing that overwhelmingly matters is, when is the car autonomous? At that point which it is autonomous, the cost of transport drops by, I don't know, a factor of 4 or 5. He said it straight up. We're not working on a $25,000 car. We've always assumed that at some point Mark is going to have to be dealing with competition from a $25,000 Tesla that is going to make a $21,000 FUV a hard sell. So this competition that would be coming to sort of eat his lunch is not coming. And so that means an Arcimoto really is the only game in town at that level.
We talked about the Chinese coming, so I don't want to get into the Chinese are coming with $25,000 vehicles. They are. That's happening. But you're right, in terms of the real competition, in terms of autonomy, is Tesla. And anyone next up, who is that? We don't know who that is.
We don't know who that is, right?
I'm buying Tesla tomorrow.
Yeah, I mean, me too.
You've given me the bull case for Tesla, but how does this relate at all to Arcimoto directly? How do they benefit from any of it?
First of all, Elon is saying that full self-driving could be more profitable than the vehicle business. He's also saying, I'm doing it. He is going to do this. And so that means that within a few years, Teslas will be full self-driving. And that is going to usher in a transformation, like Elon says, that is unlike anything in human history. And I think even people that are bullish on Tesla, even they are not even factoring in how tremendous this change is going to be. And the reason why I think this is important for Arcimoto is because this is Mark's main focus. Tesla and Arcimoto are not in competition. As a matter of fact, the better Tesla does, the better Arcimoto does. Tesla is the whale and is moving the space. We're just going to be focused on like what sells for the fully considered lowest cost per mile, kilometer of driving. That's what matters. How do you maximize the efficiency of getting people from one place to another and then charge them in a sensible way? If he gets this cost per mile down and achieves his goal of, say, 25 cents or whatever it is, now you really have to make a case for people to buy vehicles when the price of just simply ride sharing, the vehicle that you need for the specific moment that you need it, it's going to be tough to make a compelling case to be selling vehicles when you can literally have any Tesla you want on demand at any time.
He's basically saying, look, we're going to charge you when you want to use FSD, you're going to pay us for it. That's really what he's saying. And he's told other manufacturers, you guys can license it from us.
Yeah.
included in your cars,
and they're all going
and pay us per use or whatever, per mile or whatever it's going to work out to be. But Tesla's going to be the center of this hub,
right,
and everybody else is going to be paying Tesla basically this perpetual fee,
right.
for full self-driving.
Now, and that's something that's exclusive to Tesla. That is not necessarily something I think Arcimoto will enjoy, but it just goes to show you where Elon is going with this. And by the time he does that, any new players trying to jump in at that point, it's too late.
Minimum 5 years behind.
Right. They're already 5 years behind making the vehicles. Can you imagine what it's like to be trying to start a full FSD? Impossible. Everything pales in comparison to the value of robo-taxi or personal driving. You go from having an asset that has a utility of perhaps 12 hours per week per passenger car to maybe around 50 or 60 hours a week to a 5x increase in the utility of the asset. The cost didn't change. Effectively long term, every car will have FSD. And so the value of that will be a very big number. You have a passenger car, which normally is driven 1.5 hours a day on average, maybe 10 hours, 12 hours a week, a lot of cars in parking lots. So we're spending money, not just driving the cars, but storing them all over the place. We can get rid of a lot of parking lots if you have a car that is operating all the time. I think it's way cheaper to draw a price point with Robo-Taxi, which is an autonomous Tesla, which every car we've made in the past 3 or 4 years will be capable of that. Then a bus or a subway will cost less than the subsidized value of a bus ticket. I'm not going to take the bus. If it costs you, I don't know, for argument's sake, $2 to travel 10 miles point to point, taking the bus, especially in cold weather or dark, may be a little dangerous for that. I just do not understand how profound of a change this is. It's not like some little feature. Select the most profound software upgrade maybe in history. Millions of cars suddenly have about 4 or 5 times utility overnight. I don't actually know how to quantify that financially, except that it's some big number. Elon says, it is apparent from these questions that the gravity of full self-driving is not fully appreciated. If an asset has 5 times more utilization, it's like dividing the cost of that asset by 5. A lot of the disconnect between Wall Street and Tesla is they just don't listen to what Elon is saying. He is telling you exactly what he wants to do. And I feel like Mark and Arcimoto is a bit of that too. People are projecting onto the company what they want it to be.
Are you talking about me and Lee?
Well, you and Lee, definitely. You and me and Lee disagree on this point. But I'm saying in general, you're not the only one. This is part of the bear case for Arcimoto.
I think it's like 50-50 split between what we want to happen, but Mark has his own thoughts on what's going to happen.
Mark has his own thoughts. And now that we've heard what Elon Musk has said, I want to listen to what Mark has said, again, through the lens of what Elon has said about where the future is going. Just based on some of the things that you've said, particularly in our first interview, when you said that you've done models where Arcimoto can be completely profitable just in rideshare, has made me believe that ultimately the true play of Arcimoto is rideshare. Producing 50,000 vehicles a year, these are not meant for individual customers. They're meant to become a fleet that would essentially pay for themselves much quicker and create positive cash flow. In a nutshell, I'm starting to believe that Arcimoto's main competitor in 5 years is Uber. It's not Tesla selling individual units to customers.
I should be clear that has always been the vision of Arcimoto.
That has always been the vision of Arcimoto.
From before the beginning of the company, the question about what does the future of transportation look like when you have autonomous vehicles, what do those vehicles look like? And we have thought from the very beginning that it would be totally insane if they were 5 to 7 passenger, 4,000-pound SUVs that are still actually much more likely to be single occupant vehicle trips. The big evolution of that model is noticing that in rideshare, you almost always have 2 drivers in the vehicle. There's the driver driving and then the driver being driven. And so what that has really helped clarify is what we call Robo-Valet. It's essentially smart summon on demand of the Arcimoto that you need. It dramatically simplifies the technology challenge. The first goal in our autonomy exercise is really just a logistics play. How do we get a vehicle from a hub to a hotel? Or how do we get a vehicle from a hub to another hub, or from a hub to a charging depot? We see on the way to the full robo-taxi a whole range of intermediate steps that we think will improve the business model of rideshare.
It's very, very clear what Mark's plan is. He is looking to capture revenue in the incremental steps towards full self-driving.
The one thing we missed before when we were discussing this, he clearly did say, he said Robo-Valet, and then he went on to explain what that means. But there is an infrastructure to even the Robo-Valet besides autonomy, because supposedly there's people operating this network that we discussed at length, I think.
Yeah.
I think we both agree that, right? There's people operating this network, that it's autonomous to a certain extent. It's a big network even for Arcimoto at this point. But I see, look, I'm in totally agreement. This is the direction he should go. The only disagreement we've ever had is what year is he doing it? What happens in the next 2 years for Arcimoto? Is the Deliverator and the rental thing the important thing? Or you're saying Look, the Deliverator, not that important. I'd rather have the Robo-Taxi network starting to get built.
The most important thing today is to get the platform to scale. So the underlying vehicle platform that is common amongst all of the vehicles that we build today, and the ability to host autonomous technologies.
The very first thing that Elon said on the call was the fundamental focus of Tesla this year is scaling output. He's doing the same thing Mark is doing. He's scaling the platform.
They're both saying the same thing. They are. Elon doing this is a whole different ball game than some 200 million market cap company. Do you know what I mean?
What other company has the vehicle and is also focusing on autonomy?
NIO, XPeng, Mobileye, a company that provides the technology for every single platform.
For them.
And NVIDIA provides the technology for platforms too.
But NVIDIA doesn't make cars. Mobileye doesn't make cars. And we have seen...
They need an Arcimoto. I get
They need an Arcimoto.
Got to be able to drive by wire. It's got to be able to steer by wire, brake by wire, and throttle by wire. And we demonstrated that capability in proof of concept form over the summer. When it comes to building out the full autonomous stack or the driverless stack that gets the vehicle to you when you need it, there are a bunch of people working on making sensor and software stacks in this industry and using a variety of different approaches, a variety of different sensor topologies. And the thing that we found that they're typically missing is the right vehicle platform to put their technology on. So we're not going to today spin up a division that is doing that job that a bunch of people are already doing. We just want to build the right platform for companies, potentially many companies in this space that are doing that higher level piece of the equation that is the sensor and then the brain that drives it around.
You might have missed it, but he said, I want to make this platform for a company or a variety of companies. I basically have all the platforms. All you got to do is connect your software to it, the basic skateboard and controlling it. We got you. They can become the unofficial, official platform for everything that's not a four-wheeled vehicle. And when you think about it, who else would it be? Is it going to be one of these legacy automakers? Probably not.
Well, there is plenty of competition coming. The difference is, there is a big difference. So Rivian, XPeng, NIO, we've talked about Tesla, even Nikola at this point, who knows? But my point is there's plenty of competition who's going to be building on autonomous software. In fact, there's a company called Too Simple, and we can talk about another episode, but they only do autonomous trucking and they're already experimenting on road. Plenty of competition coming. The difference is, which I think you're right in, those companies cannot produce a vehicle for the $10,000 to $15,000 range. Even Arcimoto can't produce that vehicle yet, by the way. But having said that, I really fully believe Mark at some point will have between a $10,000 and $15,000 vehicle. And that'll change the game because now what you're saying totally plays in that he'll be a competition of one or two. And maybe there's some Chinese manufacturers coming in for that too, but I'm saying at $10,000, he's got a leg up. He's got the 10 years on that tiny platform. He's missing that important part, that software stack, which we keep talking about like it's just going to happen. So my thing is like, he needs that stack. He needs to show us he has that stack. And then your bull thesis, what you're talking about, becomes my bull thesis. I just want to point out real quick, in our FUV channel, we have been discussing something interesting to investors that you guys should check it out and join. We're discussing options for 2024 for FUV because look, we're investors at the end of the day. Me and Carlos can go back and forth, but we're investing for a reason into FUV. It's to make some money, right?
Some money.
So you guys should check it out. Joe Buslife has been posting great option stuff. And obviously LG is here and he's posting his videos and we're discussing his stuff as well. The other thing I want to point out is if you do join our Patreon and you become a patron, we have stock alerts that we're actually updating on different companies, trades that we're showing people what we're investing in. So even in this down market, me and Carlos are still spending our hard-earned money.
Yeah, still buying.
Come check it out. Join our Patreon and join the Discord, which is free to join for everybody. And then if you want the extra features, you got to become a patron.
It is really today all about getting that base platform to scale. And then over the course of the next 24 months, it's dropping the new product families onto that same base platform.
He's only trying to perfect the platform, get that little skateboard as cheap and efficient as possible.
There is a benefit to go over this video again, because you hear a lot of other details that we missed on the first time around. Yes, he is making clear, even in that little clip you played, I didn't hear that before, that he has a plan over 24 months to slowly accelerate his production to this Robo-Valet thing. Let's start scaling this out. And I missed that the first time.
The idea is like, if the underlying platform has some core issues, it's just going to be amplified once you add a software stack.
Well, it's much more dangerous. It's a vehicle. It can kill people. So yes, absolutely.
The effort on our side, as far as Robotaxi, is getting the platform to be drive-by-wire and safe when it does so. Because when we're building at 50,000 a year, we want those basic platforms to be capable, to be sort of future-proof for autonomy.
When we did this video in December, I actually, Mark was right. I heard him a little bit incorrect after listening to this again. because I haven't seen this in 3 months or
Right.
no, a month. I'm sorry, I haven't seen this in a month. So, Mark, I think I was wrong. You are saying that you are just getting the platform ready for those things, like we say, Robo-Valet and everything. He was clearly saying there that he's going to ramp up, sell these vehicles, and get it ready for those things like autonomy. He was saying that there. I just didn't get that part of it, I guess, because I just heard robo-taxi, robo-valet.
Right, and you're like, get out of here. It takes a second to accept that Arcimoto is going for this autonomous robo-taxi, robo-valet thing and not going the traditional way that you would expect. The potential for this is actually massive.
I'm learning a lot watching our own videos.
I know. See, that's what I'm saying. So guys, on that note, hit the like and subscribe button, guys, and hit the bell to be notified to get some more of this content.
The engineering heavy lifting to get that Robo-Valet piece doing, we see that could as easily be accomplished by partnership as by DIY. So in terms of the near term, while we're building in low volume, we want to maximize the revenue that we generate per vehicle that we build.
That's another key distinction. What he's building in low volume, he wants to maximize the revenue per vehicle. If he can take the hit on the vehicle, but made 35,000 from that vehicle in a small Robo-Valet test in a small market, now you're signaling to the market that it's not about units sold. It's about how much revenue are you generating per vehicle.
Every car company's gross margin at this point, like Ford, let's say is 10%. Tesla's is 30%. Arcimoto at least realizes we cannot be a conventional car company because the gross margin is terrible and we're going to lose money. We need to be sort of a SaaS business, but sell our platform, but also get a monthly subscription type fee or autonomy fee or whatever they're planning to do, a rental fee that they expect to get a continual subscription or a continual income for years and years on the same 20,000 vehicle, to your point.
That's where, rental fleets for destinations, that's sort of the low hanging fruit in the space. It gets a lot of butts in seats. It generates more revenue per vehicle than if we sell them. And
it generates more revenue per vehicle than if we sell them.
We definitely see a huge opportunity for the Deliverator in commercial fleets. And so that's going to be definitely a significant area of focus.
Well, one thing about that, okay, because we've gone back and forth, you, me, Lee, have gone back and forth about the Deliverator. I think the Deliverator is a huge part of the success of the company. I just don't think they're going to be selling it. So what I think in the future, this sort of last mile delivery is not going to be handled by the companies themselves. It's not going to be handled by Walmart or Target. That's going to be a new industry. That's going to be somebody, say a fleet operator who lives in an area like a small town with a bunch of these massive stores, Walmart, Target, Home Depot, and you set up shop, you get say 10 of these FUVs or a combination of FUVs and Deliverators, and you actually create the fleet where you service the different companies. It's a win-win situation. The fleet operators making money, drivers or the people that are operating the vehicles, should they need to, are making a bunch of money. And you don't have to then go upsell Home Depot to buy 10 or 12 of these the charging infrastructure. You know what I'm saying?
Uber and USPS, if they had a baby, they would have this type of a fleet.
Right. No, that's a great way of looking at it. This is an interview with Stephen Mark Ryan. If you don't know who Stephen Mark Ryan is, he is a massive Tesla bull, but he backs up his cases with numbers and facts. He had an interview that came out yesterday with Farzad Mesbahi in his podcast series, who's also another big Tesla bull. He did an interview with Stephen Mark Ryan, and one of the things that Stephen Mark Ryan said in terms of what he thinks of the future of Tesla, I think also relates to Arcimoto.
So competition, I know that's something that you talk about sometimes.
I can't even say it with a straight face. I can't even hear it with a straight face.
Is there anything out there legitimately like that you're saying, yeah, well, if this comes up, it could eat into Tesla's market share, or it could pose a problem to Tesla long term?
Tesla's lead is literally unassailable. No one's catching up. They're moving faster. They're so far ahead. The things that they're doing, no other company can either afford to take the risk or could execute. There'll be companies that go in little tiny segments of the market Tesla doesn't bother with. They'll do well there. Lucid's a good example. If they can actually do really good with the super high end, just total wankery, absolute peak of the luxury market, they can have that. Tesla doesn't care about that segment of the market. So there can be areas where, competition does well in an area that Tesla won't play. Another one will be really tiny compact cars that have no safety features that sell for a few grand. Tesla won't do that. But there's other companies that can do that, and it's a big market.
The only areas that other companies can take market share per se are areas that Tesla's not focused on. The smaller sub $20,000 vehicle, that is a market that is basically going to be untouched by Tesla. They've already said they're not going to produce a $25,000 vehicle, which we can assume will only happen when FSD is level 4 or 5. So why are we looking at a map? We're from Brooklyn, and so I don't know if you remember, like back in the day when you'd go to a car service, they would be like a map, and they'd have the center location, and they would draw these circles, right? And the circles would be the price point. So the further away you are from the home base, the more you paid. Say that was where the home base was. You see something like a circle like this, a circle like this. This would have been like $5 to go here. This would have been $10 if you wanted to go anywhere in this range. And back in the day, it would be something like $15. What I'm proposing here is Tesla is going for this. They're going for the rides that you want to go all over here. Arcimoto is going for this. Tesla doesn't care about these little short trips that are 2 or 3 blocks. You're going from your house to the last bookstore to go back home. That's not of interest to Tesla, right? Tesla wants to take you from here to Culver City or East Los Angeles. That's where they want to go. That's not where Arcimoto's serving. So basically, everything in this circle here is going to be owned, and probably Tesla will dominate. These small little trips, when you're going from, say, Windsor Square to maybe Koreatown, that's where Arcimoto is going to make its money, because that could be an area where it's not worth it for Tesla to drive a 5,000-pound vehicle 2 or 3 miles.
You're saying Tesla has to go there maybe 10 miles away, 20 miles away for a 2-mile trip? It doesn't make sense to charge a quarter a mile.
Right.
But Arcimoto has these little pods all around.
So if I want to go to the supermarket, yeah, I'm probably just going to ride share an Arcimoto. It'll probably be cheaper than a Tesla, even before it gets down to 25 cents a mile. An Arcimoto should be cheaper than a Tesla to go to the store. If I can just order a Deliverator and have a couple groceries, that's going to be more economical for me. That's where he wants. He wants the turnover, where Tesla wants the miles.
On this point, I do agree, because at least in the first 10 years of this becoming a reality, there are not going to be enough Teslas on the road for this service, first of all. They're going to be constrained, as he keeps saying. We cannot make enough vehicles to get out there as people demand right now. So the same thing is going to happen with this Robotaxi network. If Tesla hits this, there's not going to be enough, because I know I'm going to use it. Okay. Right. So there's not going to be enough vehicles. I don't think Arcimoto will be the only player, but they're going to be one of the small players doing this. But it's going to be such a massive market, because at that point, who needs a car?
If you're trying to create an EV company today, and you heard what Elon Musk said on that call, it sounds crazy, but by 2030, no one's going to own a vehicle. It is a death sentence if you try to create an EV startup company based on sales, because at some point, the cost of ride sharing a Tesla every single day of the month is still going to be cheaper than the cheapest you can make the vehicle for. And to your point about there's not going to be enough Teslas to go around initially, what do you think that's going to do to the price? It's going to be artificially higher, just like, you know, Uber and Lyft do during surge. He still needs to have millions of vehicles on the road before he can really get the price down. And so for those short little trips, the Arcimoto makes sense.
We're secretly discussing Tesla in this FUV video. That's what I feel like we're doing.
The richest man in the world, who has single-handedly transformed and created the EV industry, is telling you what he wants to do. And if Mark's goal is aligned with exactly what Elon is trying to do, it's a massive tailwind for that company.
All right, here is the second massive S-curve for Tesla, and this is FSD and Robotaxi, right? Autonomous driving. So right now we're kind of at the beginning. We haven't even started, let's say, the massive slope up on this S-curve. We're still in this kind of, you know, taking a long time kind of phase. Once it hits kind of this inflection point, you're going to see this massive increase, right, in just value, utility, and the economic value it brings the companies who are taking the majority share of this innovation.
It brings a massive, massive increase in revenue and valuation to the companies that are participating in this paradigm shift.
And this S-curve will probably last for another at least 10 years or so.
10
Let's
years.
compare these two S-curves together, right?
Okay, and let's look at this now. Okay, the EV space. Remember, we said Tesla can easily get $3 trillion, I think, just selling EVs. Look at the size of the FSD Robotaxi. Now, of course, this is Dave Lee drawing this, but I would imagine that the real number is not that far off.
So you have the EV S-curve, and then you have the FSD Robotaxi S-curve. So I think this EV S-curve is actually huge. It could probably take Tesla to become the largest, the biggest, the most valuable company in the world just with this S-curve, because it is massive in scale. However, this FSD Robotaxi S-curve is actually much, much bigger. It's probably 5 or 10 times bigger, if not more. And
5 or 10 times bigger. That would put Tesla at a 5 trillion or 10 trillion valuation. Even if it's not 10, maybe it's 8, maybe it's 7. It's still an order of magnitude larger than where they are right now.
The reason this is correct is because it's a network now that everybody can use. So it's not just Tesla selling per vehicle. Remember, their FSD computer, if they license that in any way and get $1 off each of those computers in every car, when I say dollar, I mean, it could be anything, $100, I don't know.
Right.
But when they get some sort of monetary value, licensing this technology to other car companies, I mean, all of a sudden that market is not just Tesla selling a vehicle to somebody, it's every other company selling a vehicle, putting Tesla computers and FSD software into theirs. That's why it's so big, because it's not just them selling one vehicle at a time. And also it's them charging a recurring revenue at the same time on top of it.
On top of that. I actually, you said something really interesting that I never really considered. You said it allows them to expand the network outside of Tesla. There's going to be people that would have never considered buying a Tesla that might rent one And that could also lead to sales. So you're right. This allows them to expand to not just potential FUV owners. You got Rivian owners, you have ICE vehicle owners. This FSD robo-taxi, robo-valet thing could actually end up leading to sales because it's sort of like a test drive.
There's a main reason somebody will use an Arcimoto or an FUV beside the Tesla, because let's say your budget is not, I want to pay $50 a day or whatever it's going to be. I don't know. That's just an example. Yeah. I have $10. And at some point, the vehicles will be so cheap, as even Mark said, and obviously Elon said multiple times, but still, there's still going to be a level of cheapness. Not everybody's going to be able to afford the Tesla ride. They're going to have like the other vehicles. Maybe Arcimoto is in that tier of like shorter rides and also more enjoyable rides. Maybe you just want to experience the outside. So I agree with your point, but I think there's all these levels that even Tesla's not going for, as you said. They're not going to compete with Arcimoto.
They're not going for that. And the Tesla, when you get in the Tesla, you don't drive it. At least in the Arcimoto, you would drive it.
The big challenge of all tech companies who have discovered a S-curve or are riding a technology wave is they have an original kind of product platform that's
the Arcimoto's original product platform.
Going through this tech or this S adoption here. Now, what they need to do is during this kind of slope, the S-curve slope up, they need to actually start finding a new technology S-curve that will actually continue their growth upwards and create kind of a new platform or new product. And this is extremely difficult because oftentimes this means killing or actually disrupting, right, your original product, which is tough to do, and most of your revenue, right, comes from your original product.
That is the exact point that Arcimoto is right now. Arcimoto is trying to create a new S-curve, and they have to fundamentally destroy the previous business model of selling the vehicles to customers. It's incredibly disruptive, but Dave Lee's going to go on to explain why they absolutely must do this for the success of the company.
Problems that tech companies face, and the first problem is they start the new S-curve too late. They're too busy during the growth phase where everything is going bonkers. They just focus on that, right, running the business, gaining profits, and they don't invest enough into the next big thing. The second kind of problem is the new S-curve they get into is just too small. It doesn't carry the company to big enough markets, right, to justify a continued increase in market cap valuation. The result is if they don't disrupt themselves, they eventually get disrupted.
That is the most succinct explanation of why I think Mark has to do what he's going to do now. If he doesn't disrupt himself, knowing that Tesla's long-term goal is to have no one buying vehicles, he will be too late if he tries to sell 15, 20,000 of these to customers before he gets it out there and sees a robotaxi network. If he doesn't do it, somebody else will do it. The FSD autonomy technology will have matured at that point, and he would have missed the boat. So it's a really tough time to be an Arcimoto investor right now because we have to sort of abandon this thing that we were just getting on board on. He's got that product platform. He's getting it just about ready. He's building all the infrastructure out to be able to get these vehicles to scale. But in the same time, he needs to start building this second S-curve even before he starts with the sales, because if he doesn't, there might not be a future of the company because he himself would get disrupted.
I agree with what Dave Lee is saying and what you're getting at. I totally see it. And I see what you're saying about Mark disrupting himself. The problem is Tesla has been in this S-curve for over a decade. They've made the product. It's out there. It's successful, making billions of dollars, $5 billion last quarter in free cash flow or something crazy like that. Correct me if I'm wrong on the numbers. Anybody in the comments? LG?
$6 billion, right? $6 billion? Yeah.
It's around $5 billion, but
LG's like this right now.
My point is, they're disrupting themselves after they're already spewing money left and right, like out of their butt, out of their arms, out of their legs, everywhere it's spewing money. But Mark disrupting himself while he's in the middle of the beginning of the bottom of it. He's the bottom of the beginning of that little tiny S-curve. To disrupt himself there, I mean, look, I want it to 100% succeed, blow up, and just go ahead, robo-taxi everything. That's what I want. But the problem is that he can put himself in a position, if I'm to give one negative, he could put himself in a position where the company's life is on the line, which might be the right thing to do, and it might not be. That's my only issue with it, that it could be too soon to do what you're saying, that maybe 2023 is the day I get he gives me my FUV because he wants to sell a couple of these puppies. And then 2025-ish is when he's completely just, listen, guys, we're going after this thing. We've sold 50,000 of this vehicles, but really that's not where we're going to make the money. We're going to make the money in this robo fleet and Robo-Valet and rental and rideshare. That makes a lot more sense to me. And that's why we keep going back and forth on this. You see what I'm saying?
Well, and I don't disagree with you. He is disrupting himself at a very, very tumultuous time. The stock is super low. Dilution is imminent. It's a tough time to be an Arcimoto investor. My basic thesis is if you're investing in Arcimoto right now, you had better know that you're investing in a robo-taxi, robo-valet company. But the potential reward for that, as we're going to see, I got some charts to show you.
On this, I agree 100% with you.
The potential reward of a $200 million company that could be essentially the number 2 robo something network. I mean,
even if it's 3 or 4.
Even if it's 3 or 4. I mean, I read somewhere that Tesla plans to get their first robo-taxi revenue in 2024. So I think that whatever your personal time frame would be for a company, if you're an EV startup or an autonomous play, you've got to know that Tesla's going to be ready by 2024. And I don't think necessarily Mark wants to be rushing it right now, but he understands that if I don't, the party could be over by the time I get there, or it could be the difference between being number 2 or 3 and being number 10. And that's that's going to be a big difference in revenue, right? And by the way, guys, for the cost of a robo-taxi ride in 2024, it's literally $1. That's going to be cheaper than going to the store. This is cheaper than buying a cup of coffee, and this is cheaper than your Netflix subscription. Come on, guys.
The reason we keep bouncing between the two companies is we're clearly showing Mark's vision is aligned with Elon's vision. He's just the guy 10 years behind Elon in terms of all this technology. I want you eventually to get to, how does he get there?
He's 10 years behind in the technology of trying to say making a vehicle like a Tesla, but that's offset by the small little piece that he's actually trying to solve. They might even be a company that at some point licenses the tech from Tesla. What he's trying to do is be this little gap filler. Just like Stephen Mark Ryan was talking about Lucid. Tesla is not going to go after the $250,000 sports car. They're not going to go after that market. It doesn't make sense. They're trying to accelerate the change to sustainable energy. And does that market help them do that? No. Does the 1 mile trip help them? No. And so Mark has a much, much, much smaller goal to achieve. And if Tesla's moving the industry there, Mark doesn't have to worry about trying to get people to just consider autonomy or consider robo-taxis. Tesla's going to handle that for him.
Right. Tesla's handling the market. You're going to want a robo-taxi.
And then
Mark will be the 5 mile, 10 mile drive.
And since they're not making a $25,000 vehicle, there really is no competition just in terms of vehicles.
Elon was very clear that he sees FSD, full self-driving, going into wide release by the end of this year. That is improving. Dojo is coming. Elon is seeing where he thinks that self-driving will be better than human, safer than human, better than human before the end of this year.
He's going to have a car that is safer to drive than a human being by the end of this year, is what Elon is saying. That tells you how fast this is accelerating. So that curve, when Dave Lee was talking about the adaptation, that happens this year. So this would be technically the beginning.
Well, no, that's right. That's the beginning of
that S curve, right? The full self-driving S curve.
Basically, the way I heard Elon talking, FSD makes new models irrelevant. It's like saying, you know, when in the flip phone era, well, you have to have multiple models of flip phones to sell a high volume, and then the iPhone comes out and sells in insane volumes. They basically see the Model Y, Model 3 with FSD as like an insane game changer for the vehicle market. And, you know, it's like choosing a car versus choosing a horse. You know, you're going to sell a lot more cars than horses. That's it. It's going to be the only self-driving car. So you have a choice between a non-self-driving car and a self-driving car. You're choosing between two completely different things. They're not the same thing anymore. The way I read that is that when you're thinking about a robo-taxi world, the paradigm of needing all these different models becomes bizarre. You don't really care if you're just looking for a robo-taxi ride from point A to point B. You don't care whether it's a Model Y, Model 3, Chevy Bolt, whatever. You just want to get from point A to point B. And you don't care that much about what the vehicle looks like or what its functionality is. Because 80% of road trips are getting from one person from point A to point B. Their goal is the lowest cost per mile or kilometer driven. They're striving for maximum efficiency, and playing games with how they price FSD for different customers is not the goal. They're going for lowest cost per mile. I think they're all going to be commercial use. I think they're going to stop. They're basically going to effectively stop making Model Y and Model 3 for private use, or you're going to have to pay a lot more for the vehicle in order to get it, because the value driven by having it serve as a robo-taxi is so much higher than the value of it sitting in your garage doing nothing. People hate when I say that. You want to have your self-driving car and have it sit in your garage 20 hours a day or 22 hours a day. You're not accelerating the transition to sustainable energy, and you're not improving the economy by lowering the cost of transportation by having this high-value vehicle sitting in your garage. It can deliver much more value to society and make much more revenue and profit for Tesla and make Tesla shareholders a lot wealthier if you put them in robo-taxi use. That's my take on it. Maybe I'm wrong, but that's what I'm hearing. And if you own a Tesla that is capable of this, the incentives to put it into the robo-taxi network are going to be so high that you're probably going to do it.
This is the difference between a company that is mission-based and a company that is like growth and metric-based. He doesn't care. And if that means that it's better to have the vehicle on a robotaxi network, he's not going to sell the car to you. And if that's the world that we live in, and you're Mark from Arcimoto, you have to prepare for a world where nobody wants to buy cars. A lot of these things take about 10 years to happen. Like, my daughter is never going to know what it's like to own and drive a vehicle. And in that world, when they get of age and they're 16, 17, 18, their whole lives are going to be in autonomous vehicles. It's going to be really hard to sell them on the idea that I have to drive this myself.
It's like someone coming to you with a horse.
What is a horse now? I go to a place, I rent a horse.
You go to
for
a barn, a special place, you rent it for an hour, someone shows you how to not die.
Yeah.
And
I think you showed it on our Discord. In 1910, there was one car on the road. In 1920, there was one horse on the road. That happened like that. In 10 years. It sounds crazy, but in 10 years, the idea of having a carport, the ideas of parking lots is going to seem ridiculous to that generation because they grew up in a world where it just wasn't the case.
I agree. 2030s, no brainer. I don't even want a vehicle in 2030.
Probably not. This is that'll be the last vehicle I own. And
but 2023, I do want a vehicle in 2023.
People are still going to buy vehicles in 2023.
That's going to increase margins. So we're going to see not only substantial growth in revenue, but substantial growth in profit. Profit probably growing faster than revenue. If deliveries grow more than 50%, revenue might grow 60 or 70%. And profit might grow 80 to 100%. This is very, very fast growth and leads to a very, very high valuation of a company.
This whole episode is me wanting to buy a Tesla tomorrow.
But understand, Mark's goals for Arcimoto are directly in line with what Elon's trying to do. And the specific part of this autonomous future that Arcimoto's going for is an area Tesla is not interested in. That means that essentially they get to ride the wave and not compete with the giant. So what Warren said is, with this robotaxi network, you're going to see profits increasing faster than revenue. We calculated the profit on that vehicle based on the sale price of the vehicle. Right. But if you've got 5 or 6 times multiplier on the revenue of that vehicle, Mark can sell 1/5 or produce 1/5 of the vehicles that he needs to make the same amount of profit. Arcimoto makes 15,000 vehicles and they sell them for $15,000. This is an average price. You have $225 million in revenue that they would generate from the 15,000 vehicles.
More than they're worth right now, just to point
that's more. You're right. That is more than the market cap of the entire company right now. But if you have 15,000 vehicles, if we're saying that there's a 5 times multiplier on the revenue in Robotaxi, you get $75,000. Every vehicle that rolls off the Arcimoto factory is bringing in $75,000 worth of revenue, not 15,000 off the sale price. So what does that do to the revenue on 15,000 vehicles if they're all in a robotaxi? So now you have $75,000 revenue times 15,000 vehicles. It's 1.125 billion that they can generate from the 15,000 vehicles, assuming that they're all in robotaxis and producing a 5 times multiplier. Arcimoto and Adventure Center to bring FUV rentals to Fort Lauderdale, Florida. This partnership continues to build upon Arcimoto's destination rental strategy, driving revenue per vehicle built, as well as brand awareness as happy customers cruise FUVs up A1A and beyond. There's simply no better advertising. You know how on top of the taxis, they have those billboards? And they get pretty advanced with them. They have LEDs and stuff. The Deliverator that's a great place to,
that's perfect.
To sell some advertising.
It depends. If Arcimoto runs that network, like you're saying, then they can get that advertising revenue, which could be significant, honestly, because if they're always driving around, they're being rented or they're autonomous at some point in the future. Yeah, that's an additional point of revenue. I totally see that.
Right. So Tesla would get, say, 30% of the revenue on an owned vehicle by a customer and maybe 100% of the vehicles when they're fully autonomous. So, okay, so using that number, we can assume that maybe Arcimoto would get 30%. So out of the $75,000, they would only get 30% of that. If Arcimoto has their own facility like they do in Eugene, Oregon, they run and own and operate the rental facility.
They make all the money.
They make all the money. I could even see something like where they give you you don't even buy the vehicle. They just give you the vehicle and you put them out there and they might take a larger percentage of the profit, say 50%, until the vehicle's paid for. Then after that, I'm going to collect 30% in perpetuity and you get 60% or 70% in perpetuity for life. When those vehicles go out of service, that's where I could see, or when they introduce new models, you get rid of the old ones and then you can really see the sort of used FUV market. And that's where you could sell a used FUV for 10 grand right now.
That's a great plan. Okay. I'm going to say it's an awesome plan, Carlos.
Here comes the butt. The butt is coming.
You and Mark had a brainstorm meeting, I'm sure. But the problem is, if you just multiply the amount of money up front that is needed to seed all of these vehicles that if you don't sell them, right, you just seed them. That's the problem. They cannot seed too many vehicles because they'll go bankrupt. If each vehicle costs 10 grand to make, 15 grand to make,
right,
and they're not charging anything for it and they're giving it up, even though the revenue in the back end is way bigger. Like you said, I'll take your word for it. 5x, 6x, 10x. The problem is that takes years and years to play out. In the meantime, they're hemorrhaging money. And LG actually covered it in his last video. Maybe we put a link somewhere. The fact that they can't just do a conventional raise anymore. In fact, they cannot just dilute us anymore and get enough money.
Okay, but hold on. Your thing is, in the meantime, Arcimoto's not making any money and you're fronting the cost of the vehicle. So who pays for the vehicle? What if you say, okay, the cost of the vehicle is $15,000. We still need to be paid. So we offer a financing at 2% or even a percentage of it. Maybe it's not the whole thing. Maybe you finance 50% of it, right? And then the vehicle itself is generating the money to pay for the financing. In the same way that when you buy a house, you only put down 20% and the rent is what's paying the mortgage every month.
That's eventually going to happen, which I agree with you. Eventually, they're going to have to see this network even further. But initially, they don't even have the money on the books. Instead, it has to be some sort of compromise by selling some vehicles and seeding some vehicles. It has to be that compromise because anything else can actually put them in real danger.
Let's just give them a 5 times multiplier on the revenue generated per vehicle. Then making 500 vehicles, which I think is doable. It would be the same revenue if they made and sold 500 vehicles
times 15 grand,
7.5
million. So
7.5 million.
For Arcimoto to put up even $8 million for these 500 vehicles and not make any money at all is like a real problem.
This is where we have to start to use our imagination or maybe try to speculate a little bit and use ranges more than actual numbers. Since that's the big unknown, we know that there's a multiplier on it. We don't know how big it is, and we don't know like what's the cash flow. Okay, let's just say we're saying it could make $75,000 a year per vehicle divided by 12 means that vehicle's bringing in $6,250 a month.
They have to seed the network, and then they have to get the word out that they are there, that people would even want to rent them.
Tesla is doing the majority of the work in terms of bringing the awareness that this is coming. Again, remember, all of what I'm saying now is predicated on Arcimoto riding the wave that Elon has said Tesla is going to create. Let's say it's not 6,000. Let's just say it's $5,000. Just using a number, okay? Let's say it's not 6,250.
Guys, he is super bullish.
Okay,
I just want to point this out.
But these are just some. Again, this is just an experiment, right? So let's just say that the vehicles, instead of making 6,250 a month, and how do we get this number? Dividing 75,000, the projected revenue of the vehicle divided by 12 months. Let's just say it's 5,000 a month times 12, then the vehicle's going to make 60 grand a year. So out of 500 vehicles that they put out there making 60 grand a year, they've now made 3 million.
Divide that by 52 weeks?
1,150.
Okay, that's per week. Now remember, right now in different parts of the country, it's renting for different prices.
60,000 divided by 52, they need to make $1,153 per week divided by 7. That's $164 a day. You're telling me they're not going to make $160 a day?
Yes, that's exactly what I'm saying, because that's $160 a day every day of the week for 365 days a year. There is periods like you even mentioned. Maybe winter, it's not rented. Yeah. Maybe at certain times, no one wants the vehicle at 7 in the morning or whatever. No one wants it at 6 in the morning. I don't know. I think you're overestimating how much you can actually make. And maybe to be accurate, at least for this calculation, maybe we just cut it in half.
Now we're at 30. So we're like well below the 75,000 we think.
Even if it makes the same amount of money that it costs, and every year it makes 20 grand.
Yeah.
That is already a super successful business.
This is what I'm saying. If the vehicle only needs to make 20,000 divided by 52, now you got to make $384 a week divided by 7. You only need to make $54 a day.
Much more reasonable. Even if you double that to 100 with all the expenses of whatever, maintenance, a person.
Right.
Let's say you double that. Now you have $100 a day. That's something I can wrap my mind around.
And this is coming from Elon Musk's mouth. It's a 3 to 5 times more utilization of the vehicle. At a 5 times multiple, it's 75 grand. We went to 60 to be conservative, then cut it in half to be conservative again. And now we're down to 20,000. And even at 20,000, giving 50%, they've almost covered the cost of the vehicle.
At 20,000. I believe that bull case. To me, that's a bull case. Actually, it's not the bare minimum. That's the bull case. Even making 20,000 per vehicle.
Bull. That's a little baby bull. It's a little.
Listen,
tiny.
I'm a reasonable.
He has like
bull.
one horn. He has like one horn.
They still need to prove their model. On top of it, they need to get their name out there just like Tesla's gotten out.
It's only a matter of time before analysts start talking about, okay, Elon's going to be doing this. Who else is in the space? I mean, when do you think we're going to see Arcimoto on Kramer? I mean, this is going to happen. And so we're already doing that with EV sales, but now he's pivoting to robo-taxis. So the conversation is going to turn to Uber. It's going to turn to Lyft. And then they're going to say, well, those are companies that are kind of doing that. What companies are making platforms? Who are you going to talk about? They'll talk about Nikola. They'll talk about Rivian, and they will talk about Arcimoto.
Me and you had a conversation that we tried to record for a podcast,
Damn
guys.
It.
And,
sorry, we did it for the patrons, and it was just an hour of like blank screen.
Well, I just want to see Patreons. You're getting special podcasts we're going to be releasing, but we messed up the first one, so
we didn't hit record. It was the best podcast you'll ever hear.
The best podcast we talked.
You've never heard. Amazing.
But you mentioned something, so I just want you to clarify that nobody is thinking about Arcimoto as this autonomous play. They're all thinking of it. They're going to sell these 20,000 vehicles. How big is this market for 20,000 vehicles? Blah, blah, blah. And that's how they're being valued, that nobody wants these 20,000 vehicles. Your thing, if you want to go into it, is that the market is missing something, and me and you can have a huge upside in the next couple of years.
If the market is looking at them to be selling vehicles and they're pricing them that way and they're evaluating them that way, if suddenly overnight the market becomes aware of the fact that that's not their goal and Arcimoto is positioning themselves to be a robo-taxi network, we have to change the metrics by which we're speculating on Arcimoto's future success. So for me personally, ATVM loan, stock dilution, that's all fine. If you're investing in Arcimoto, you have to assume that whether it's the ATVM loan, stock dilution, whatever it is, they're going to get through this moment. They're going to get through this S-curve on top of S-curve thing. And what you're investing in is them being the number 2, 3, 4 player, in the same sentence as Tesla, bringing autonomy to the masses. That is automatically 5 times what they're worth right now. At 200 million, that puts them at a 1.2 or 1.25 billion. If they time this correctly and the market becomes aware of Arcimoto as an autonomous play after they've diluted shares, the negative catalysts have gone. We're looking at Arcimoto stock price comparable to what it was in 2020. And now you're buying it knowing all of this stuff that's happening in the future. It is incredibly undervalued. Their 222 event is 1 month after this Tesla earnings call. If it goes the way I think it's going to be, he'll introduce some upgrades to the FUV. We might see a tri-motor, whatever, but I really think the focus is going to be on Platform 2 and autonomy. If that's the case, he couldn't have picked a better time to be discussing that. And that could be the moment where the markets have to sort of accept that FUV or Arcimoto is not the company that they thought it was, and that maybe they were valuing it incorrectly. These are the financials for Tesla and for Arcimoto.
I'm going to want to hear this. I'm going to want to hear this one.
Okay, here we're looking at Arcimoto. Market capitalization of 202 million, a price to sales of 74. Tesla is at 850 billion, a price to sales of 28.
Well, they're being priced high right now. 74 is very high.
Price to sales. But if you look at a company like Uber's price to sales is more reasonable. It's more like a 5.
Wow, 5. Wow.
5. My argument here is that we should not be comparing Arcimoto to Tesla. What we really need to be comparing them to are the 2 big ones, Uber and Lyft. My conclusion was Arcimoto's main competitor right now, or the company that they're most like, is not actually Uber or Tesla, but it's Lyft. Lyft is a lot smaller. It's a bit more niche. They're a little bit younger.
I think you're trying to say that Uber is the Tesla of the rideshare world.
Yes.
And Lyft is the second player. And FUV might be the second player.
My overall thesis after all this we've been talking is that ultimately, I think we can see Arcimoto looking more like Lyft at some point. Lyft has got a $12 billion valuation and they don't make vehicles.
But really what you're saying is if Lyft, the second player in this game, is worth $12 billion right now, okay, and they don't produce nothing, all right, except software as a service, basically. We have Arcimoto worth 200 million. How are they now worth $1 billion or more? That's what we're getting at. Lyft is 12 billion bucks and it's a number 2, not as big as Uber. Here we have Arcimoto, possibly a number 2, not as big as Tesla, but they're still worth 12 billion. So we have a 200 million to 12 billion discrepancy at some point if they're successful.
And what's the multiplier?
Which is a massive multiplier in that.
12 billion.
Divided by 0.2.
Yeah, it's a 60 multiplier.
60x.
So at the current price right now, 537 times $5.37, that puts Arcimoto's share price at a whopping $322.20 a share if they can reach the market cap of someone like Lyft.
But also be accepted as an actual rideshare, Robo-Valet competitor to Lyft.
And what we know now is that that is the only thing that Mark is going for. That's what he wants the company to be seen as. In the same conversation that you talk Tesla, Uber, Lyft, you have to talk Arcimoto. We're looking at a company that is a potential $320 a share company if they achieve what he says he's going to do. Even if everything goes wrong for them, I don't see how they're not even at a $1 billion valuation. ATVM loan, stock dilution, it's a bit of a distraction. For me, that's just saying, get all that crap out of the way, take the money that you need to take, Mark. As soon as all that stuff is done, that's when I'm going in. I do think that at some point we're talking about a $1 to $10 billion company, in the same way that we're talking about Tesla as a $1 to $10 trillion company. You know what I'm saying? I just say, like, when Tesla's a T, Arcimoto's a B.
Join us on the Discord. We are going to be talking FUV, and Carlos's super ultra bullish case for FUV. Remember, he was the bear. Just remember that, people. Okay. We are looking at calls for FUV, and this is something, as investors, like I keep going back to, we care about money. So please join us. Obviously, LG is part of the community, and even Q's Views is now part of the community.
And look, so LG doubled his position in Arcimoto.
Look at this. Hold on. I got this. Let's read this. Doubled my position to 6,000 shares on Friday. Bold move, might backfire. Highly risky, not financial advice. The other thing we have for Patreons, obviously, we have special Discord section where we have our trades, all the episodes listed, of course. We have stock alerts, and we're tracking certain companies, and obviously member updates. So join us for $1. You can be a member, and we can drink a cup of coffee. Sorry for the self-promotion, but we need to do it.
Guys, if you like this kind of content, please hit like, please hit subscribe, click the notification bell to be notified when this video drops. Join us on the Discord, whether you agree or disagree, add your voice to the conversation. It's a lot of fun while we're also talking stocks and talking smack.
Well, please join our Patreon. It's $1 to support us. Just because you like what we're doing and you like the free Discord, it totally helps us out. For the higher levels up there, we have $4.20 a month and $7.99. You do get some benefits. We have early access to videos, exclusive Q&A, actual trades as they happen. And we have a talk show that me and Carlos are going to do every morning, a talk show for the two of us, apparently, that is called The Morning Brew. And we'll talk about, the different stocks and what's happening in the market. And we're going to start posting that soon on the private Discord channel. So please join us, $4.20 a month. It's one cup of coffee.
Okay, so I just talked for like 2.5 freaking hours. You had a very, very clear roadmap for Arcimoto and what you wanted to see. What's your interpretation of that?
I think I was wrong about what Mark said initially. I heard 2023, we're trying to seed this ride share like completely. But no, he's actually trying to grow it. Like he said in the clips we showed, that's why even hearing it again really brought me back. Over 2 years, that means 2023, 2024, he's going to grow this network of the platform being correct, and then seeding the ride share, the Robo-Valet, whatever else happens. We're not talking about just rentals here. Rentals, we always agree is going to happen, right? Me and you are on that. I was wrong about what Mark initially said. The good thing that I am seeing from what you're saying is actually, I do agree, the market is not valuing them at all as any autonomous play, because if they did, they would probably be worth over $1 billion right now. They're basically saying, you have to sell this many vehicles by this much time, and then we'll value you according to how many vehicles you sell. And Mark is explicitly saying, look, yes, we're going to do that, but over the next couple of years, our actual model is to seed this ride share network. Now it's the timing question when this all starts to play out. But the thing is, a $200 million market cap company in 2 years will seem ludicrous if he has any success in any of this, which you discussed at all. So we're going to be looking back at Arcimoto, who knows, 2, 3, 4, 5 billion or more, depending how far he's gotten. I'm like, why? Why didn't I buy as much as I could at $200 million? I feel that's going to happen. And all this discussion back and forth and blah, blah, blah. At the end of the day, it's like, why didn't I buy when it's $5 billion?
Right.
This is like the moonshot. This is what we're going for here with Arcimoto. So I agree with you. Another point that anyone who's completely just investing for this company strictly for selling vehicles, just like with Tesla, in a couple of years, you're going to be disappointed because that's not the main goal.
Yeah.
But once again, short term, you got to sell the vehicles. I still believe that. But 5 years from now, I'd be shocked if full self-driving is a real thing and Mark has figured out how to get some full autonomous stack. Me and you have had a moonshot, and it's like 100x territory. This is what we're talking about. We're not talking about the 10x, 15x anymore. 100x territory, 100% for Arcimoto. That's a big if. This is not financial advice. Big if. You might lose all your money. I just want to be clear about this, but if this happens, me and you're going to be super happy at that day.
God. Obviously, we'll have conversations about this on the Discord, but why don't we revisit this in February after the 222 event? Bring in LG, bring in Q, and react to what Mark says.
If you look at the call options, and thanks to Joe Buslife who posted this, and I highlighted something that if you bought the $5 strike and you paid option price right now, it's around $230, let's say $250, whatever it is. It's expensive because you're paying half of the strike price. But remember, you're limiting your downside. And the second thing is that if it goes up in the next 2 years, do you think it's stopping at 750? If they are exceeding our expectations, it's probably not stopping at 750. So if it's not, I was like, interesting. So a $5 strike between 13 and 21 bucks. Just highlighting this little part, you get from a 3 to 7x on your money. That's amazing. Plus, you've limited your downside. So they go bankrupt. Okay, you've lost your 250, but you didn't lose the $5. Great. But mine and Carlos's bull case, mostly Carlos's bull case. Let's say his thing happens for real, and it's over $60. You're talking about, look at this, 24x happening on this stock. It's absolutely insane if this comes to pass. That's why I'm willing to probably this week take a couple of these call options and just buy them and hold them for next 2 years. If I win, look at this. This is multiples. I'm winning multiples on my money. If you put $1,000 and it goes somewhere between 13 and 21, you get $3,000 to $7,000 back. The thing is, what's amazing about this sort of play that, thank you once again, Joe Buslight, for posting this. Yeah. This is really important. What's amazing about this, that we don't have to wait 2 years. If they just go to back to like here, even $10, we have a 2x on our options, and you can sell out within a month if this happens. Yeah. Sell out within a year if it happens. That's why I like the longer term call options, because I have 2 years for this to play out. But if it just goes bonkers, and Carlos is right, and this rideshare is really happening for real around 2023 or at the end of it into 2024, then we can be sitting at massive, massive profits. I don't even know where. I don't even want to discuss it. But my point is, it could be like tens of X's. It is a very big number.
Over the next 2 years, we're going to have our answer.
This is a bit of a gamble. I'm not saying it's not. Yeah. Okay. Just as LG would say, you buy the shares, you hold them, and you wait the 5-10 years for this. That's why I have shares. But there's a part of me who says, what if this gamble pays off? I'm willing to lose $1,000, $2,000, whatever it is for you, right? I'm willing to lose a couple of grand on this bet. So this week, I'm probably going to do some call options.
If you sign up for our Patreon, I think you're going to see some new activity in the trades coming up.
Right. Thank you. Like and subscribe, and see you on the next one, guys.